Ladies and gentlemen, welcome to WealthDom. With me, your host, Norbert BM. This is the weekend edition. Today, we're going to go over, as usual, the portfolio changes and, of course, the happenings in the last week. So let's get started with the market vitals, and after that, we're going to go into the portfolio changes. Now, looking on the weekly performance of the market, the S&P, the Nasdaq, and the Dow Jones all closed in the positive due to a really positive unemployment rate. Speaking of unemployment rate, let's jump into the market vitals for the last week. We had on big economic events. On Monday, we had from China, the PMI manufacturing report came in better than expected. Then we have from Italy, the inflation rate report came in also better than expected. Then from Germany, the inflation rate year to year, that is, it also came in better than expected with 0.1%. Overall, the entire European Union had a relative disinflation or reduction in the inflation, in the pace of the inflation. It doesn't mean that inflation is going backwards, but it just means that the inflation, at the rate at which inflation is growing, is actually reducing. So, not less inflation, but less growing inflation. Fed Chair Powell had on Monday its speech, and a bunch of chair members also had their speeches. Then on Tuesday, we had from Japan, the manufacturing report came in as expected. And from the European Union, we had the inflation rate, as said on Monday. We already had two major countries reporting their inflation. So on Tuesday, the inflation rate came in better than expected, of course. Then we have from US, the ISM and PMI manufacturing report and the JOLTS report both came in pretty good. The market did start to tremble a bit on these reports. Then on Wednesday, we then didn't have any kind of major report except from the consumer confidence from Japan. It still kept struggling, the market. Also on Tuesday, we have from balance of trade and ISM PMI from the United States and from Australia, the balance of trade. And then on Friday, after the non-farm payrolls and the unemployment rate came out better than expected, it just, boom, massively exploded. The whole market got back basically all of its losses in 1 week, and it did end on a massive green. And we're going to talk about this later on at the end of the video, where we're going to evaluate the risks looking forward in the market. So definitely stick around to the end of the video. Now, looking on the week ahead, it's pretty interesting. Now, Monday, we don't have anything, so expect the markets to be pretty much the same as it was. Also, China is going to come back from its week-long trading pause. And an MBM from Australia, MBA Business Confidence will come out on Tuesday. Then also, we have from Canada, the balance of trade. Then on Wednesday, we have from Australia, Consumer Confidence Index. From Germany, we have the balance of trade. And from the US, we have the FOMC minutes. This could influence the markets, of course, if they change something in their minutes. On Tuesday, then we have from the US, this is basically the entire Tuesday is only US with core inflation rate year to year. So the core inflation rate month to month and year to year, and inflation rate, which is not core, but the all-around inflation rate with month-to-month and year-to-year. And then on Friday, we have from UK, the GDP, month-to-month, and from the US, we have the PPI, month-to-month, and unemployment rate from Canada. And then we're going to close up the week with the Michigan Consumer Sentiment Roll. Okay, so it's going to be a really interesting week. Not that big of a deal. Maybe inflation comes in worse than expected, and then we're going to have a major problem. But until, let's say, Tuesday, we're safe. So whatever the market closed up on Monday, I believe is going to throttle around in the upcoming weeks. And we are getting extremely near to the next earnings reports.